Hello and welcome to the RANsquawk Weekly Wrap-Up video. So just going to take a moment to answer a couple of questions that you sent into the desk this week. So one of the big points of interest has come today after most of the major news wires did run that an S&P downgrade of some of the major Eurozone sovereigns is imminent. So the news wires are expecting some action around 8 o'clock London time this evening. So that would be at 3 o'clock in New York time. In terms of what we're expecting, we have had some details leaked to the wires that we are expecting only 2 of the 6 Eurozone AAA sovereigns to be downgraded, and we're expecting Germany, Netherlands, Luxembourg and Finland, all AAA, to remain as such. So that would leave both France and Austria as the remaining AAAs to be cut, and most of the expectation is of a 1-notch downgrade, so that would be to AA+. In terms of other countries that may well get cut, then we could see rating action taken on Portugal, Spain and Italy, amongst a few other peripheral nations to look out for as well. So that will be later on in the session. We'll keep a firm eye on that. So in terms of the fallout to this, there's a few things that we'll keep a close eye on. Firstly is any repercussions or mention of the EFSF. So it is widely stated that either France or Germany, if they are downgraded, then we could well see a 1-notch or potentially even a 2-notch downgrade of the EFSF. So we'll see if there's any specific action taken by Standard & Poor's. It may well come a little later, so we'll keep a firm eye on that. Now, a thing to look out for is if any of the sovereigns are kept on watch negative. This will be quite an interesting thing to keep an eye out for. So in terms of the repercussions, it is worth noting that next Tuesday we will see a €1.5 billion EFSF bond auction, so this could well be strongly impacted by any rating action from Standard & Poor's. So this action would mark the end of Standard & Poor's rating watch negative that they had placed on most of the major European sovereigns back in early December, pending the outcome of the Eurozone summit from earlier in that month as well. So the other item that we're going to focus on is US corporate earnings. So we did kick off this week with Alcoa. So they did report slightly disappointing numbers in that their EPS was a loss per share rather than earnings per share of 3 cents. So this was in line with expectations after they had revised down their guidance the previous week, and their revenues did exceed expectations, so their shares did bounce slightly. However, the expectations were firmly reduced after their previous disappointment the following week. In terms of financial earnings, today saw the real barometer for the US financial industry, with JP Morgan reporting a quarterly EPS of 90 cents. That was in line with expectations. Their revenue did come in slightly softer against the expected. We also saw a reduction in their Q4 profits. That was their net income. So it's really pretty disappointing for JP Morgan there. Their shares were down around about 2% pre-market on the back of this, and they fell additionally as we've seen financial weakness due to the S&P matter that's really impacted the markets for today. In terms of some of the key highlights for next week, it will be largely financial stock focused, as on Tuesday we will have earnings from Citigroup and Wells Fargo to look forward to. Wednesday we'll see Bank of New York Mellon and Goldman Sachs reporting, and then on Thursday we'll be looking at earnings from Bank of America. In terms of tech stocks, we have Google, Intel and IBM all reporting on Thursday, so that's likely to be a key barometer for the performance of the rest of the tech stocks throughout this corporate earnings season. So that's about it for me for the day. I hope you have a great weekend, and we'll see you again.